Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for January 9th, 2018. Let's take a quick look at today's markets. Well, we saw more buying. It's like a broken record, but it's pretty awesome when you can take advantage of it. The Dow today experiencing another triple-digit gain, up 102 points. The S&P 500 off to its best start since 1987, if you can believe that, up another 3.5 points, while the Nasdaq gained 6 points today, and the Russell was fairly flat, pulling back a little more than a point. Now, there are two markets that certainly weren't flat today. One was bonds, the bond market, and the other was crude oil. Let's have a look. And we're going to start off with TLT here, the ETF for the 20-year Treasury, down sharply today. A significant drop, down about $1.70. More importantly, it gets us closer and closer to breaking out of this range that we've been in for a while, and already starting to take out previous lows here. That's important. We've now got a downward slope on that 20, so we do have downward momentum. If we look at the weekly chart here, there it is. So we're starting to roll over again, and we have this head and shoulders type pattern here. Shoulder, head, shoulder. If we get below these lows here, the October 23rd, the week of October 23rd lows here, which was 122.42, I think we're going much lower. So a significant down day today that could be followed by much more downside if we get below those October lows. Now, let's have a look at crude oil. Crude oil today, the complete opposite, up sharply, closing at a new 52-week high here, but more importantly, breaking above that 62.5 level that we've talked about for a while, which was this high here, the April high, the April of 2015, that is. So, this high has been in place for a while, and now today we closed at 63.48, blowing right through it. So I think not only did we have a strong day today, up 2%, but this will most likely be followed through here by additional gains here in the crude oil market. Gold also down fairly strongly today, down about 7 points or so. Oops, let me resize that for you here. This is the weekly chart. Let's go back to the daily here and show you. There it is. So a bit of a pullback here. Certainly doesn't, doesn't kill the chances for more upside here, but certainly gold taking a bit of a breather today. Now, as you know, earnings season is underway, and I think there's a particular sector here that's going to do well. I mean, financials have been doing well for a while. Many of the charts in the financial sector look pretty good and should continue to run. With earnings season, playing them individually could be an issue, or at least could be risky, right? Because earnings season, you never know. You can get a big gap one way or the other. A bit of a safer way to play it is to look at the whole sector. And what I mean by that is pick an ETF like XLF, a very popular, very liquid ETF here for the financial sector, and one where we have seen here recently a breakout to new highs. So a very timely breakout ahead as we head into earnings season, and many of those financials, the bigger names, report later this week. So this way you have an inexpensive ETF that you can pick up, whether you trade it with options or buy it outright. But one or two bad earnings reports in that sector is not going to kill the whole thing, right? So it's a little safer way to play it. Well, you're taking a lot less risk. You're kind of taking a broader scope to it, but it is still an effective way to take advantage during this earnings season. And here with XLF, it really looks like a decent play, as we still have a nice trend in place, nice strong momentum, and we've just broken out to new highs. There it is on the weekly. Nice strong momentum still in play. And here's the monthly, where we are really making a run for these highs. So I totally expect to see 31 being hit in the near future with the potential of even more gains. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.